Alright, so this is a breakout video from our Lunch at the Market segment that we did today. That was a little long, so we weren't able to post it to YouTube, so here you go. The YouTube version of our Goldman Sachs trade. You see right there, you're looking at the 175, 160, and 145 levels in Goldman Sachs. The trade, the thesis, is to get long Goldman Sachs. But instead of laying out all that capital and actually buying the stock, which is quite expensive, we're going to get long the 160 October calls. See, that's a buy GS October 160 call right there. That's our line in the middle. Then that actually is going to cost us $14.50. That's the number in blue right below where it says buy Goldman Sachs October 160. Okay, to finance that, meaning to make it cheaper, we're going to sell the 175 October call. We're going to take in a credit of $9.94. But that still means that we paid a little bit for the call. Then we're going to sell the Goldman Sachs October 145 put, also for a credit of $8.75. So you take real quick, you add $9.94 plus $8.75, then you subtract $14.50, and you can see right there at the bottom, right above where it says ENR, $4.19 credit per this trade on Goldman Sachs. Okay, so where's your risk? Well, you see you're completely in the green above 160 all the way to 175, and from 160 all the way down to 145. You're in the green the whole time. Why? Because you took in a credit for doing this as opposed to a debit. Okay, when you have an option, when you buy an option, there's a debit to your account. They take the money out to purchase the option. This is generating a credit, meaning they're going to pay us $4.19 per one of these, right? Don't forget, because it's options, you're actually going to multiply that by 100. So we're going to make $419 if the stock trades between 175 and 145 from here to October expiration. Okay, where is our risk? You see the red lines below 145. Okay, we actually break even there in the white squigglies. Okay, we take in 419, so we subtract 419 from 145. We're actually good all the way down to $140.81. Okay, so that's about $20 lower than we are right here. So that's a decline of more than 10% in the stock. We will get long the stock as long as we leave the trade on. Okay, below that 140.81 level. Okay, Goldman right now, the EPS estimates for Goldman is about $22. If we put a 10 multiple on it, that gets us to $220 in the stock, which means that right now on trailing earnings, Goldman trades at like a 6 or 7. That is an insanely low PE. And we're big fans of valuation over here, so you want to seriously consider putting on this trade to play Goldman Sachs, right? If nothing happens in the stock, it stays within that basically $30 range, then great. We collect our credit and we move on with life. Okay, so that's really the goal, is to have nothing happen to the stock, but you are protected all the way down. Okay, and if you see upside, you have some good potential in upside on this spread because you get long at 160 and you can sell out at 175. All right. At that point, I would imagine if it trades up to 175, you can probably close the whole spread out for a profit. Okay, sell out of it, close that exposure you have to the downside, and move on with life. So that's how to play Goldman Sachs through the fancy options spread that we came up with over here at Magnum Opus Financial. Thanks so much for tuning in, and have a great day.